Good morning. This is Jeffrey Cohen, April 25th. I am the President and Investment Advisor Representative for Chicago Quantum, U.S. Advanced Computing Infrastructures, Inc. Have a great day today. I love it. I love the markets. And today is going to be a red day, it looks like. So let's talk about it. Did you know that the stock market has had very low returns over the past year? If you look at your brokerage statement or you look at your portfolios, you see it, but let's talk about it. Excluding dividends, the NASDAQ 100, so the best NASDAQ stocks, NASDAQ Composite, is down 2.5% this year. The Russell 2000 small caps are down 12.5% this year, and the S&P 500 is up about 5% this year. So you held all these stocks, you took all this risk, and yet the market is down for you. So we see this and we're quite concerned, right? So what we've been doing is we spent the weekend researching a number of different sectors, investment sectors for you to look at. So where's the market today? Well, if you take a look down at the lower right, you see the equity indices, thanks to FinViz, are down. They're not quite as down as they were earlier this morning, but they're down. Of course, Nikkei was down. Europe is down. Europe is down a lot, actually. U.S. Treasury yields are down, which is interesting. The bonds are up. And we're going to talk a little bit about yields over to the left here. You see your soft commodities are all down. You see metals are down, and pretty significantly. Copper's down 2.4%, which is a lot, actually. U.S. dollar's up. U.S. dollar is strong. That's usually very bearish for the market. And if you're hungry, lean hogs are up, feeder cattle, oats, so some foodstuffs. But generally speaking, the market is down. Good news is gasoline's down. So if we take a look at the bonds, this is FINRA Market Watch. Right, by the way, I love FINRA. And what you can see here, which I think is interesting, is on Friday, total issues traded, and they were primarily investment grade, 8,500 shares, 8,500 issues of bonds. 2,300 went up, 5,800 went down. What I find really interesting is on a 52-week high, there's 27 issues. So 3% of issues are at 52-week highs. Those would be companies paying off their bonds. We noticed some of them. In fact, some of the mining industries where they're making so much profit, Cleveland Cliffs, right? 52-week lows, 4,550. So more than half of the bonds are trading at 52-week lows. So if you ran the fixed income, you're suffering as well. And it's not just the investment grades, but high yields. Advanced to decliner, is a 2.5 to 1 decline. And it looks like about 3 to 1 decline on investment grade and 5 to 1 on convertibles. So, your bonds are way down. So, other thing that we noticed, being as the market is going down, is we had looked at certain industries that we follow. So, one of them is chips and semiconductors. So, these are the canary in the coal mine, right? You would expect that if the market looks up, if people are starting to feel flush, they're going to buy computers, gaming systems, they're going to buy technology. They may even want to mine some Bitcoin. They're just feeling flush, right? Feeling good. Bring me some tech, Jeffrey. New phones. But if you take a look pre-market, it's a pretty broad chip and semiconductor index that we've put together. You've only got 2 up, and the majority of them, the rest of them are down. And if you take a look, something Alpha and Omega Semiconductor, right? This is normally a very efficient stock, high beta, high risk, going crazy, right? It's down 8% pre-market. That's rough. 1.5 times price to book. This is a growth stock, right? It's down on the 50-day. It's actually up 200-day, right? So it's pretty stable. Down 8% is a pretty big move. Some other indices I just wanted to show you, right? Specialty retail with one furniture company. This is the other, recession bellwether, right? These pay dividends. These are nice companies, and some of these are your like your Walmart, your Dollar Tree, Grow Generation. There's some specialty in there. Alibaba's down pre-market, Rent-A-Center, Foot Locker, right? Where's the Gap in here? Gap's actually up a little. The Gap has really suffered, so nice to see that. If we look at crypto, and crypto is now crypto and mining. Because what I'm starting to see is, the crypto thing is, this might be over if the market's crashing. Who wants to put their money in something that's so speculative, right? But so when we look at mining stocks, gold mining, copper mining, iron ore mining, in fact, we probably ought to add Cleveland Cliffs to this one. I'm going to CLF. I love Cleveland Cliffs. Good U.S. steelmaker. So things are down. It's tough. If you're in the mining business right now, you're making a ton of money. But if you look over here, right, if copper's down 2%, if gold's down 2%, then your business is down. And so you can see it. You can see that leverage means they're down more. Just cannabis. We're big cannabis market trackers. We do not smoke. We do not partake. We get vertigo. It's not helpful for us. But, you take a look at the cannabis sector. It's pretty... And tobacco. And we don't smoke either. You're pretty far down. Now, what's interesting is... couple of stocks looking up, right? Corbis in pre-market is up 2.3%, which is nice to see given that we hold so much Corbis. But yeah, just interesting market, interesting times in the cannabis market. So still not looking up yet, right? What other sectors, Jeffrey? And then let's get to it. Money managers. We love the money manager segment. Best brains in the business, right? You've got to be pretty smart to be managing money, to be looking for that little edge in the market. We love those folks. We are those folks, right? And so, but they're still down, right? So these are good, they're nice dividend yields out here. It's not bad. Now, Cohen and Company, we looked at before at a much higher price, and it was not attractive for us at the time. Sculptor, not attractive at the valuation. So, of course, those are the ones that are up pre-market, a little more speculative, but it's interesting. In general, right, your prices are getting better. Carlyle Group, prices are getting better. Brookfield Asset Management, Ares. Every time they go down, we earmark more money to be going back in. And then lastly, I'm sorry for the name, Shitco's, but we track a lot of garbage out there, right? And so most Shitco's are down, which makes sense. In a down market, who wants to put their money in wildly volatile stocks that don't go up? So Singularity, looking good this morning. SGLY, Big Bear AI Holdings, looking good. AMTI, Meta Materials, which is the old Aero Century, is up pre-market. So if you're looking for a jet ski ride, if you're looking to go on the zip line, right? Zip line to hell, then you want to think about stocks like Singularity, Future Tech, Big Bear, AMTI, MMAT, because these stocks, it's memes. It's pump and dump. Unless you're kind of armed and ready to take on those sectors, I'd stay away. And you can see towards the top, a lot of these stocks are actually down, and probably for good reason. Look at that. Marathon, 18. I think we said at 30 this thing was a dog and you should dump it. We made a video about it. It's down all right. Let's go back to our model, right? If you stayed this long, you deserve to get something. Let's give you something, guys. Let's get out there. So what do we got? What do we got for you? And by the way, the futures are still down. They're moderating, but they're broadly down. This market is broadly down this morning. Not good. So I want to talk a little bit about leptokurtic stocks, because I think this is where you need to kind of hide today, right? So if you bought every stock that went that made profit, You're expecting to earn 5%. Overall market return is 4%. This is a tough market. You work hard for your money. Do you really want to sit there at 5%? I don't think so. Now, the third best stock in our run is QQQ. I point this out because why take a risk on individual stocks, right? QQQ, broadly diversified. Then you have the S&P 500 ETF Trust, SPY. And then you have IWM, the Russell 2000. Those three indices are in the top 10 stocks to hold individually today. So if you got to sit, you might as well sit in something that's good, right? That's gonna be fairly low risk. I'm sorry, this is so hard to get to what I want to get to here. It's we analyze a lot of stocks. We're analyzing over 11,000 stocks every night. So here's what I want to show you. This is the holy grail. Leptokurtic stocks with low variance. And we pulled these up. Pretty much all of these have a dividend yield. AQN, HCIC, PNM, SLF, VZ, WMPN. These are dividend yielding stocks that just don't move. These are boring. Boring. I had somebody once say to me, Jeff, what am I going to hold PNM for? New Mexico's public utility. Are you crazy? Or Verizon? Pays like a 5% dividend, but the thing hasn't gone up in years. WMPN, I think that's William Penn Bank Shares. SLF, I think that's Sun Financial out of Canada. HCIC is an investment company. And AQN is another, like, Albuquerque something utility, AQN. This is crap. However, those 6 stocks pay a nice dividend and are extremely low risk. So if you want low risk, and by the way, these stocks actually score pretty darn highly in our model. I marked them in green. Where are they? Come on now. It's a different thing. Oh, it's on it's on the server. But it doesn't matter. Net, they pay a dividend. They're pretty attractive. They're low risk. Leptokurtic means. By the way, Jeff, what does it mean to be leptokurtic? A leptokurtic distribution. Let's get on the videotape here. Leptokurtic distribution is the blue. Come on. All right, fine. It's in the blue. It's narrow. Okay? It's narrow. What that means is most returns every day are around the mean return that you'd expect. That's nice. That's tighter than a normal distribution, right? And then you have low variance. You want a low variance stock in markets like today. That's not bad. I'm also going to share with you our best portfolio. Our best portfolio is 8 high-risk stocks. Those 8 high-risk stocks are still giving you beta exposure. If the market were to turn, those stocks are going to go up, and they're going to go up super fast. AOSL, CLFD, DDS, SI, SITM, SQ, TTD, the trading desk, and ZIM. By the way, SI, Silvergate, AOSL, Alpha and Omega Semiconductors, SITM, Time, they make time chips, SQ, Block. There's some good high-risk stocks here, and the reason I bring this up is when the market's dropping, you are going to lose money on these stocks. They are going to underperform the S&P 500. But when the market goes up, they're going to overperform, and they're going to overperform dramatically. So it's a good place to be. You want to be in those stocks when the market's going to turn around. So we got a leptokurtic, low variance, and then we've got the most efficient portfolios. So where are we at? Tough market today. Market's going to open in 8 minutes. It's going to open lower. Pretty much all the stocks that we follow, for the most part, are going to open lower. Oil's lower. Bond yields are lower. The dollar's higher. Metals are lower. I mean, good luck out there. I kind of feel like we're in for a rough ride today. But again, pre-market doesn't mean how the market's going to go. It could turn around. So lastly, if this was helpful for you, if you like that we share our insights, leave a comment below. If you want me to talk about what the stocks were a little more, or maybe list them out, leave a comment below. It's nice because I'll respond to your comments. We can have a little chit chat there. The other is there's a red button, subscribe button. If you like the video, if it's helpful, if you want notifications on future videos when we go live, hit the subscribe button. Really helps us a lot. Please do that. And we do tweet, if you like that kind of thing, we tweet Chicago_Quantum. We post our videos. We post findings. We post blog posts. So we're out there for you. So you take care now. Thanks for listening. Have a great day in the market. Bye-bye now.